Good day, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, the 26th of September, 2024, 6:25 p.m. Central Time. China, China, China. Just remember that. Metal market's on fire. Couple of things. Remember, we were talking with the gold go, and my first objective was 2,600. It's now $100 an ounce more. I have a very long-term objective of 32.5. It's 3,250. I am not saying it's going there on this particular move, so don't write me about that. But I am saying it is a price it's going to. And you've got an area here where the market is just going. And why? You've got the Federal Reserve on its now cutting cycle. So we've entered that. Whether they go 25 or 50 basis points, that'll also be the argument you hear each time a meeting comes up. Does it matter? I don't think so. I think what matters is they're going to take it down, and where to will be the big question. Do they get under 3%? We will find out over time. But that means that they're trying to spur on the economy. The other monster in the room is China. And we know they have been a deflationary spiral. Yes, deflationary. And they are working their best to try to pull out of it. It's very difficult. For those of you that get my full newsletter today, I put a chart of what Chinese home values have done just recently. And when I tell you it's like that, it's just like that. Now, the Politburo there did meet. It's a big member board. And they had decided to, over time now, $284 billion more money. So you know all the stimulus we heard from the bank, from the mortgages, and what's going on. This money is now meant to help the different provinces that are not getting real estate money because nothing's selling. How are they going to pay their bills? It was all built on property transfers and things of that nature, a lot of their income. Well, now they've got to get help. So the government's there helping them with that. I read that the Politburo does not want to have any more licenses being issued for new property for a while. You have to get a license to do it, but you're not going to get one. You got to finish up everything that's there first and get people happy about what's going on. But that is inflationary down the road for gold. And the reason is, as gold's moving, people are looking at where they're going to put their money. We know that the government's claiming they're going to be supporting the stock market. Okay, so China's in a spending mode. Now, how big, I don't know. The Politburo doesn't want to be embarrassed of not hitting the 5% target that they set for their yearly growth. We'll see if they're able to do it, and that's why you're seeing a big part of this come out. But that, in large part, is behind the gold, the silver, and the copper, the combination of world, not just the United States, the world, cutting interest rates in many spots. The combination of it will be inflationary down the road because the idea is to spur activity, and the gold market's not missing on that. Will there be bumps along the road? Of course there'll be bumps along the road. Trading wouldn't be trading if it was just straight up. You do get that every now and then. Look at sugar prices. Give you a great example of it. Then we take a look at what the foreign currencies are doing. And in the Swiss franc, a little savior happened. The big question was the Swiss National Bank going to go with a 25 or 50 basis point move? They went with a 25 basis point move, which didn't pull the bottom out of the rug here. And you've had a rally back into today back towards 1940 level. When we take a look at the dollar, it's again coming down. Is it going to crack through the 100 level with any authority? It tried it earlier in the week, couldn't stay under it. We'll find out again. So I said, sugar, you'll see how many points it's gone up. As we take a look at the grain markets, well, they're going to just be whipping, in my opinion, back and forth here for a bit. On the energy, I mentioned it yesterday, trying to play hurricanes to make money doesn't make sense to me. I mean, if you look at the news, it's a Category 4 now. It will make landfall sometime probably in the night. It's going to make it as a Category 2 hurricane to Atlanta. You heard me, not the outskirts, to Atlanta. I don't know if Atlanta's ready for that, all right? I mean, I've been to Atlanta. I was there once in the ice, and man, was that a dangerous time. I mean, you couldn't control cars. They're just not equipped for all that. So this will be interesting. Bonds and notes are all still what? Yield coming up a bit on it. Now, it's a combination of buy the rumor of the cut, you get it, sell the fact, and now it's a question of can they spur the economy on? You're going to get tomorrow one of the Fed's favorite tools. We're going to get the PCE price index. It's due out at 7:30 in the morning. We're looking for income up about 0.4 on the month, while spending's seen up 0.3. So maybe people will have a buck in their pocket, but I doubt it. I was reading today the articles on the earnings out of CarMax. And I bring that up because their provisions are jumping rather markedly for non-paying auto loans. And what is it, Ally Financial? Same problem they're having. So we are seeing people that came into the used car market and they bought these cars and the rates are high and they're getting hit with their other bills. It's a real problem for people. University of Michigan final. The word is final. September consumer sentiment numbers come out tomorrow. They came out, we'll see if the prelim number of 69 is beaten or where the market is. But those are the important pieces of data that I'm seeing tomorrow. So, you want to buckle in and see where you go. As we look at the gold market, you're up 1.8% as we go into Friday's trade. We're in it right now, up $47. And if you were to close here, because this is a weekly chart of closes, it'd be an all-time high close. When we look at what the chart did, it certainly picked itself up. It's had a heck of a run to the upside. These type of runs are often met with a correction eventually. So, you even saw one here, and you'll level out. Now, the correction could be sideways action, could be a little bit deeper, just like you had the one here, the first breakout. And that can happen. So if you're not in, this is probably not the spot to be coming into the market, is what I'm saying. Yeah, when you take a look at the market in terms of moving average, well, it's well over it. And, if you broke all the way down to 2,600, which is $94 away, roughly, $91 away, that would get you into the support zone of the 18-day average. You've been running this gorilla glue trade, as I call it, of the Bollinger Band, and it's a classic one. You hit it, you get over it, then you come right back under it. You don't stay over it for any overly long period of time, but every day you're hitting it. And eventually you'll know you're onto something different when it stops hitting it and starts rolling a little bit. Then you know you're in that either correction phase or at least a consolidation phase. Keep your eye on the embedded reading. Until it's lost, big breaks are difficult to get to. Like I said, you had one here. You never did embed. You tried to embed, and that's where the correction came from. Now, when you're embedded, generally the market gives you a warning by losing it before the real break takes place. It doesn't always work that way. The word is generally speaking. That's what I've noticed. The gold-silver ratio still staying under the 18-day average, which means silver's in pretty good shape comparative to gold. And silver has gained more for the year than gold. Most people don't even realize that. I didn't. I was reading an article about it this week, and I knew that I liked silver on the long side. You've heard me say that, and I wanted to do a report on it. I just got buried today in other things. I do run a company, so in order for me to break free to do these reports, I'll try to do one maybe tomorrow. I need some time. But you have a lower low, higher high, another embedded reading. That's rules the day. Now, if you get the reading under 79 on a close, the odds are you're going to get down into support. Now, notice that you had a bullish crossover, and I'll show this to you. It's great things to learn. Here is the 100-day average and the 18. They've come together. If the market gets a crossover often, I can't use the word always, but it's very often, market will make a new high off that type of move. You already did it. You see that? You went right up and did it. It's having trouble getting through the Bollinger Band, but until this number is lost, still upside. And obviously, copper's betting China, China, China. I'd be very careful of this move. The money that China's going to throw at its economy, and I said going to throw, is got to get into it. Then it's got to work through the system. So the speed the money gets through the system. We don't even know how much they're lowering the mortgages yet. Yet this market on the come of it is taking off. And I'm hearing people talk today, what do you think of China? Buy everything. Buy everything. It's the beginning of the rally. They're probably right, okay, because you're so depressed in things. But you got to have a long period of holding, and you can't be a chartist to do that. So I would just be looking at these markets and saying, on pullbacks, we get interested. This thing is set up where the 18 and the 100 are probably going to make a run at each other. In the platinum market, you ended the big decline as the market came back to the 200-day average, couldn't get under the 18, and you just had a bullish crossover here. And as you're getting that crossover of that average, you're moving up again in this market. And last, the dollar index, oversold, still in a downtrend. It's got to prove if it can get underneath this Bollinger Band for a run. If it doesn't, for the near term, it might be saying to us, the 100 level, don't push it any further, back away a little, see what the market does. So that could be what the market wants to say. You know, we talk a lot about these things and we write about them at the Linn Group. So I put out a twice daily newsletter. I don't know if you've taken a look at it, but it's in our free offers. If you haven't tried it before, we have a list of people that have tried it. And we'd love for you to try that. The price count, you always hear me talk about them now. That's important. Access to our QT Market Center. This is where you can do the price counts, by the way. That's the only piece of software that we put in there that is unique, okay? And when I say unique in this way, you can't get price counts anywhere else. So it's not that the software is unique, it's the program's unique into the QT product. They don't lease it, it's only in that product. If you're looking to find out the different categories of the types of technical tips and other ideas in the market, all these brochures are there free. My pivot point and a rune indicator series, all right? If you don't know how to work with time and price, you want to learn this. And I give you a whole breakdown. You've got those on your own charts. So you'd be clicking here, the blue. You'll get to the bottom of a page at the end of it, and there's where you're going to put in your name, your email address, and all, and we'll get everything out to you. It takes us 24 to 48 hours, business hours, and then we get everything out. So I am Ira Epstein. Remember where you can go. You can move your cursor to the top here, and I'll see you all in the morning.